is going on, guys? This is Dave with David Worrell Trading. I am pumped and I'm happy to be here in front of you tonight. We're going to pump a little positivity into the market. Hopefully, in the long run, this doesn't come back and bite me in my ass, but I tell you this, it's always good to stay positive in the overall market. We're going to go through all of that. Stick with me. We have so much to go over. I hope you guys enjoy this S&P 500 analysis. All right, guys, the S&P 500. Why do we look at the S&P 500? Well, that is what everyone, all hedge funds, if you're swing trading yourself, you should look at the S&P 500. You should ask yourself, am I beating the S&P 500? Am I taking home 6 to 11% per year on my swing trading account? If no, well, you better keep on keeping on with your long-term account with the S&P 500, and everyone using this as their benchmark. We like to use that as our benchmark as well. Right now, the S&P 500 today on 3/19/2025 has closed at 567.13, and we have a rally day. Yet to come is that follow-through day, which happens usually 4 to 8 days after our rally day. But I like to give a little S&P 500 analysis because it's easy to be bearish. It is easy to be negative. And I'm here to say you need to keep your positive pants on. Keep those positive pants on. And the reason for that is if we look just since 2019, we are on a constant uptrend. And one thing that I always refer to in our resource section in the Discord is this beautiful, beautiful chart where the bull and bear markets, if you just look at this from 1946 up until 2023, you could carry on up until current time, you would notice that the bull markets go much higher and last much longer than the bear markets that last much shorter and move much shorter. It's very important and very intuitive for each and every one of us to be positive, but to not be naive. A lot of people think it is very, it almost seems like you're a smart guy to go against the grain, or you're the smart guy to say the whole world is coming to an end. But it's harder especially more this time when you have media just getting shoved down your throat to be positive. But if you look at data and you zoom out and look at the bigger picture, you're going to see that it is better to be positive. Now, you guys have known that I didn't talk too much when we broke this 21-day moving average. I was not speaking about positivity. I was not talking about positivity. No, I didn't until this day. I said, okay, this could be our rally day. But it wasn't. We didn't put any money at risk. We did not put any money back into the market, and the market continued to fail. We talked about the $580 area. If this broke, creating a new lower low, that would be a negative sign for the overall market as we pop back up and continued to fail. Again, the 200-day moving average, another benchmark we would like to see a bounce off of, which we did, but then we continued to fail. So why am I bringing up all of this negativity only to speak positivity? It's plain and simple, folks. We have had our rally day, and technically right here is our rally day on the S&P 500. The crazy thing is it sure as hell did not feel like a rally day, as this day here on 3/14 felt much more like it. Now that we have rallied, we are waiting for that follow-through day where we are seeing 1.5% or higher on a move in the S&P 500 NASDAQ. This also includes for our IWM, which I have something to show you, which I found pretty interesting. But with the S&P 500 moving up higher today and still trading sideways, that's a great sign because we had the FOMC meeting. Old Papa Powell came out today and he spit his fiery flames into the overall market conditions. The overall market seemed to like it as we hit new all-time highs and still closed above previous day's highs. This is a bullish sign for the overall market, especially with the simple fact that we are bearing into that 200-day moving average. Now, I'm not saying that we aren't looking for more volatility to come very soon. There will be more volatility to come, and there will never not be volatility on the horizon. So make sure you're using risk management in every situation. Even though I'm being positive, we need to understand, folks, we need to understand we are just going to dabble. We're still below a 200-day moving average, a 200-day moving average as well. So if you are willing to get into the market rather than sit on the sidelines like we have been from this point till this point, we have been sitting on the sidelines. This pullback from all-time highs to all-time lows, folks, is over 10%. An over 10% correction. That is well needed, well justified after such a bullish run. I'm not too afraid, I'm not too scared or nervous in any circumstance to dabble in a little bit. I'm talking an eighth or possibly at most a quarter of an R. If I'm used to risking, let's just say $1, at this point in time, I don't want to risk more than 25 cents. Okay, so keep that in mind when I'm looking at this. I don't want to sit on the sidelines. I'm a trader. I would like to trade. So if I can find proper risk management in the hot sectors, in the hot stocks, I'm going to take those for sure, for sure. So the S&P 500, as we pull back here, you can see we are still risk off below a 21-day moving average, but I am most certain with the positivity starting to drum up in the overall market. I think this pullback, this could be where we hold. So I'm looking at a few things to dabble in. Of course, we're looking at the hot stocks. We're looking at gold. We're looking at internet insurance. We're looking at a few different things that are out there in the market right now. We're looking where the overall market is going to turn around in, what sectors are going to be hot. So this is your S&P 500. This is your NASDAQ. Your NASDAQ also looking quite the same as your S&P 500. So I don't want to dabble into this too very long. Just remember your NASDAQ is 100 stocks. These are primarily your heavy hitters, your big movers, your big goers there. And it looks quite similar to the S&P 500. Of course, your S&P 500 has a lot of your NASDAQ stocks in there, but the S&P 500 is more exposed to bigger and broader markets. One thing I wanted to touch on here, though, is the IWM. Look at this beautiful, beautiful chart. Now, you might take one look at this and say, Dave, what the hell are you talking about? Well, the one thing that I want to say is the IWM is always lagging. And in this situation, the IWM is leading. When I say that, I don't mean that on a general sense of the correction that it has to any moving average, but just as in the volume as we correct here off of our lows, you can see we have a rally day and a what could be considered a follow-through day on the Russell 2000. Which is very important to see, because if we do start allowing the IWM, the Russell 2000, the small cap stocks to actually start taking off here, you're going to start to see a lot of those small caps start rip, tater chipping to the north side. And if that serves true, then we need to itemize our watch list as needed. Now, with the S&P 500 being where it's at, we have been and seen most volatile times, many, many times. And I have brought this up before, that if we go all the way back to 2016, when old Trump came in with all of his tariffs, you'll see right off the rip in 2016, we had a major pullback. We were sitting right at the 200-day moving average, and we pulled very dramatically back here, well below this 200-day moving average. This move from this area was roughly 12%, 12.11%, and we are roughly at that same area. Is it a coincidence? I do not know. Is the market going to move higher? No one truly knows, but what I have to say is if we look at the overall past performance and the average pullback in the overall market I am more inclined to believe that the S&P 500 has room to head higher. We have a couple of you in the Discord tonight. Erica, Jimmy, Yosef, what's going on, guys? It's good to see you. B. Stewie as well. Do you guys have any thoughts, opinions, anything that you want to share with the overall S&P 500 or the market conditions in general? I know that there's so much that we can talk about with the overall FMC meeting and what he spoke on, the different sectors that are going on out there. But tonight, I really just wanted to hand over a little bit of positivity when it came to the S&P 500. Because there is so much negativity. And of course, as I always preach, nothing really happens good that's below a 200-day moving average. You know, all tides rise sinking ships. If the overall S&P 500 starts to rise, you're going to see a lot of the other market contenders rising with it, like NVIDIA, like Microsoft, and it looks like NVIDIA popped up here, but then pulled right on back. To me, this looks like it is in a stage 4 decline. I've been telling you guys this stage 4 decline after we broke this area. I said we were going to pop and start to head back down. It popped a little bit higher than I anticipated, but headed much, much lower. Microsoft, well, the question is, if Microsoft's heading lower, NVIDIA's heading lower, what about Apple? Where's Apple at? Apple looks like it's trying to come on back. What about Meta? The question is, if these folks, if the Mag 7 folks don't decide they want to turn around, then we are looking for new leaders in this market. Where are the new leaders? What exactly is happening? And we are still seeing flight to safety. We are still seeing gold, GLD, looking very good here at new all-time highs at 281.48. We're looking at some things. A gentleman I follow, plant-based trader on Twitter, just pointed this out. Now look, copper. Copper, this is more of a laggard currently because it's following gold and, of course, silver. But copper looks like it's starting to turn around, creating new lower highs here and at a psychological $100 area. If we zoom out, you can see that this is on another constant uptrend. The question is, will it continue this beautiful uptrend? That is the question. And if it does, is this the right spot to get into? There's so many things out there that we could play, but when it comes to the S&P 500, this is no place to really get risk fully on. If you want to dabble, dip your toes in, so be it. I get it. We are traders. Just understand risk reward and just take a few trades. It's okay to be small and to risk small while you dabble in this market as long as you're following your overall criterion in rules, okay? Now, we are below a 200-day moving average, so whatever you risk, expect to lose it. It is tough. It is tough right now in these overall market conditions. If I can find it, there was a section, let me see here. Oh, in Trader Lion, one of his posts, it said, no matter how good, right here, no matter how good a trade looks, if the environment isn't favorable, it will be hard to make progress. And that's so true because 75% of stocks follow the trends of the general market. So if the general market is to head lower, then 75% of those stocks is to head lower with it. That's why we root for the rally days and we root for those follow-through days, because if those can continue much higher, much faster, are more speculative stocks that are going to reach for the stars and get those 5, 10 baggers that are going to make your yearly account in your equity, in your P&L, those stocks are going to follow. So we want to root for this overall market to continue higher. If it doesn't, that's okay. We only dabbled. We only lost a very small risk compared to the overall potential in reward here. What do I personally think? Well, I think a lot of the times the best thing is time. And when I say that, it sounds like a cop-out, but what I mean by time is let the overall participants get in and get out. Show us new higher lows, meaning we have a low off the S&P 500. We have what could be considerably a new higher low. Will this new higher low hold? That is the key here, because then we could say we have 1, 2, and where's our third new higher low? Maybe just at that 200-day moving average after we break up, pull back, and then hold. I would love to see it, and I know that you would too. If you have a 401k, a Roth IRA, or any type of investment vehicle, you know how important and intuitive it is for those new higher lows so we can continue on a bull trend. With that being said, I'm still rooting for the S&P 500, and I will dabble at these times. But once we get that follow through day and we're above all moving averages, that's when you'll see me press the gas, ladies and gentlemen. Right now we dabble, and dabble we do. I have only taken 2 stock trades right now, and that's ROOT. I hope you're rooting for me because I am rooting for this stock. It is the insurance internet retail. They also give policies. They're not just getting clients, but they're also acquiring those clients with their own insurance. We talked about EVER, but I liked Root because it was actually giving its own policies. If we bring up the active trader, we're up about $336 on this, so nothing crazy. Again, usually when I pull these up, you guys see, I'm up 5, 6, sometimes thousands of dollars in a trade, but I am not dabbling. I am only dabbling. I am not going crazy in this. It's only 30 shares, and for good reason. Few good reasons for ROOT is because it's been going against the overall market. Is this a flight to safety? If the overall market starts to head higher, will ROOT, an insurance company, continue to head higher faster as I would like to expect? Or if it is a flight to safety, will it head lower and start to fail? I have a lot of questions about ROOT, but instead of pondering on them, what I do is I use this 10-day moving average as my stop loss. As we got into this trade at 143, so right at 143, you guys will see right here at 143. I'll just mark it for you guys. 143, boom, right there. I got right in here at 143 as we picked up on volume, and we had a beautiful basing breakout. Now, at 143, the beautiful thing about this trade is if it pulls back, I can use this 10-day moving average like I did in the beginning as a guide. I got in here risking low of day. Now that the 10-day moving average has been brought up to my entry price at 143, now I am not going to lose money on this trade unless, of course, we gap down. It's that simple. I took a simple basing breakout with the overall market being in turmoil. I doubled down on the financials, the fundamentals, and the technical analysis on this trade before I got in on roughly quarter share size here, okay? Roughly quarter share size. And that is what I mean by dabbling. I'm taking very small, and I'm not in a lot of stocks. The only other thing is I took COMP. This is a little bit more of a risk on trade, as COMP does look very well. It's getting tight here. I told you guys on Sunday, I said Monday, quote me, this thing is going to move in the direction it's supposed to. Well, it did. It moved. It broke this $9 high, so I got in it. I put my money where my mouth was, and sure enough, it's still just trading sideways. So it's either going to stop me out, very, very low risk. I think I'm only risking a monetary amount of like $30, guys. Like, this is nothing. This is just kind of me wanting to get back into trading. But I like this high, tight flag. I do like the fundamentals on this, and things are looking really, really good. So we're going to see. We're going to see how this works out, and if this wants to have continuation, head on higher. But back to the task at hand, guys. It is the S&P 500, and I'm going to close on saying this. We are below a 200-day moving average, and things... Oh, let's go ahead and mute this. We are below a 200-day moving average. We are in a midterm downtrend, long-term uptrend. So it is a scary area to be in, but I will say you need to stay positive. We have the rally day, and until we break this low of 550, then I would expect everyone in this room to continue to stay positive. I hope everybody has an amazing night and an awesome week. We will definitely see you on Sunday, as I am absolutely sure our leaders list will change. We are going to start seeing sector rotation. We are going to start seeing leaders lead once again. And until then, I hope you guys have an absolutely awesome week. We'll see you guys very, very soon. Peace, guys.